Welcome to the Bitcoin Crypto Daily News Podcast. It's October 28th, 2025, and it's another major move for crypto markets. Bitcoin just rocketed past $115,000, shaking up investor confidence. Coming up, we'll break down what's driving this bullish surge, why institutional players are making headline moves, and how regulatory and tech innovation is shaping the crypto landscape. Let's get right into today's top stories. First up, Bitcoin's weekend surge grabbed global attention, with the price shooting above $116,000 before cooling to around $115,000. The real kicker? Over $300 million in short positions were liquidated in just 24 hours, forcing bearish traders to exit and fueling even more upward momentum. A wave of whale accumulation followed, as big holders snapped up coins moved from long-term storage. But we're not seeing wild leverage here. Open interest on futures is still balanced, signaling this is steady, spot-driven buying rather than a retail FOMO frenzy. The anticipation of a Federal Reserve rate cut midweek is raising risk appetite across assets. For crypto investors, that means traditional market moves are once again triggering powerful flows into Bitcoin and Ethereum. On to our next big theme. Is the Fed about to make the mother of all pivots? Some analysts think so, with Wall Street banks saying quantitative tightening could end soon and U.S. reserves dipping close to the lowest since 2023. The environment is set for fresh liquidity, and that means risk assets like Bitcoin may be ready for a new leg up. ETF buying is helping to create scarcity, and comparisons to gold's rally highlight how crypto is entering mainstream asset allocation as a hedge against fiat debasement. For investors, this macro shift means keeping a close eye on both central bank signals and the inflows into Bitcoin ETFs. Both could be setting the stage for a run toward historic highs. Now let's talk institutional adoption, because Michael Saylor's strategy just added 390 more Bitcoin, bringing its total holdings to an eye-watering 640,000 BTC. That's a bold signal to the market that large corporate treasuries are as hungry as ever for digital assets. And it's not just about hoarding coins. IBM is jumping into crypto too, launching a new digital assets platform designed for secure tokenization and blockchain-based trading. Moves like these highlight growing confidence among blue-chip companies and mainstream tech giants. For those in crypto, this signals a maturing of the ecosystem and a broadening of use cases far beyond speculation. Quick bonus, around the world, stablecoin news is heating up. Japan just launched its first yen-backed stablecoin, JPYC, with ambitions to modernize payments and reach $65 billion in circulation within 3 years. Meanwhile, in the Gulf region, platforms like Kem are delivering real-world value by slashing remittance costs for overseas workers, cementing stablecoins as a practical tool for financial inclusion. To recap, Bitcoin's breakout is being driven by macro optimism, institutional buying, and evolving global regulation, and the infrastructure for digital assets is spreading faster than ever. If you want more daily updates, subscribe and check out our deep dive articles at https://crypto.ai/2025/10/28-crypto-daily-podcast-1028-2025-2/. That's all for today's episode of Bitcoin Crypto Daily News Podcast. Be sure to follow for tomorrow's essential market moves.